We're back. You're listening to Money Talks. I'm Troy Harmon here with Jacob Keen. We have a few other questions that we want to cover. We do have one here from Eric from Warner Robins. He says, I've heard many financial advisors say not to speculate on a COVID-19 cure. The reality is that it could take years to fully develop a vaccine. Question is, so why is the Dow rising on hopes of a vaccine? Somebody is making money, and it's not me. Jacob, what do you think about that?
Well, yeah.
The overall market is appreciating because a vaccine gets us closer to that herd immunity, right? So that we could all get back out to life as usual. We could see some baseball
Correct.
and some Atlanta United play and various other things. Right?
Yeah. In theory, the market would be climbing on vaccine speculation because people are saying, well, this gets us closer to 2019 earnings faster.
Right.
The reality is this year earnings are going to be down close to 20%.
Yeah,
right?
substantially. We just
I
saw
think
numbers, 35?
Yeah, I think the expectation is that in 2021 we get back to 2019 levels. Whether or not that happens, a vaccine would help a lot.
Absolutely. Now, we did have some news on that this week. Seems like Moderna, a small company, it's in fact, it was quite small until recently, has become kind of the front runner in the vaccine push. Came out this week and said one of their injections is actually showing that it does cause humans to develop antibodies against COVID-19. And, if this is what you're referring to, I would say I think the train has left the station if Eric's looking to do this.
Right. Yeah, I mean, there's a lot to unpack there.
The company's up 317% year to date. It's got a market cap $31.2 billion. So 300%. It came into the year, might have had some things in the pipeline, but when you look at the numbers on this company, the trend of 5-year earnings negative 105, all of its growth negative 17.8% revenue growth. So it's shrinking prior to this, and they still haven't made a single dime. They haven't generated revenue off of their expected vaccine.
Yeah.
And there are others. It's kind of a crowded field, and you would expect, right?
Right.
AstraZeneca is another that actually is kicking up there pretty big.
I think if we just sort of reduce what's happened, we have this disease. We had to shut down the economy.
Yep.
It's been highly disruptive. The Fed and the government came in. The Fed injected trillions of dollars.
Emptied the wallet.
The
right?
government has been paying. In fact, a couple weeks from now, the extra money that people are getting might be done with unless we get new legislation.
Yeah, and there is some talk of some extension.
I saw Reuters out talking about how 63% of currently unemployed people are spending more than they were when they had a job, that never happens in a recession.
That could be part of the reason that we've seen such a robust response in the
correct.
market.
Yeah. In a narrative context, we think of all these new Gen Z and millennial day traders that have been formed overnight.
They've got some apps.
I think for us, the big takeaway is vaccine. Don't speculate in it. We're seeing news probably end of year. A lot of time has to go by between now and then. We've seen recent spikes in cases.
Right.
There might be future economic disruption. Earnings are weak now. Yes, They may return. Valuations are pretty stretched, and if the essence of what Eric is saying is, should I chase the market here? No.
Yeah, I wouldn't either.
We're being very cautious right now.
Yeah, I mean, you've got a forward PE on the S&P 500 that is over 25. So you're paying $25 for $1 worth of earnings in the future. And, the future is obviously a little fuzzier than what we've seen in the past.
Right.
So, the normal forward PE for the S&P 500 is about 17.5.
Yeah.
And here we are at 25.5. So, I mean, that gets you kind of an idea as to how much people are willing to pay right now for that potential growth in the future.
And one final thing to keep in mind is that strong bull markets, really strong bull markets in equities,
Right.
come with broad participation.
Right.
When you said earlier in the show, you said, well, S&P is positive year to date now.
Yep, that's true.
How many companies were positive year to date?
Yeah, there's only like
Less than a third.
Exactly, way less than a
Right.
third. Yeah.
So there's
And-
definitely in this all this economic disruption, people are picking winners and losers
Yeah.
in the market.
And of the 11 sectors, industry sectors within the S&P 500, only 4 of them are currently
Right.
positive.
Right.
4 of
so
the 11.
Our perspective is to remain cautious.
Absolutely.
A vaccine is probably a game changer, but we got to get to the end of the year before.
No, absolutely. As a human being, man, I'm cheering like crazy on the sidelines for somebody. I don't care. Moderna is the one that's come to forefront. Like I said, it's kind of the front runner in this attack. But there's a lot of companies that are out there chasing the same issue. Among them, AstraZeneca, Pfizer, BioNTech, Johnson & Johnson, Sanofi Aventis, and GlaxoSmithKline. All of those companies, some of them paired together and are working on vaccines, but every single one of those efforts, they could, like I say, Moderna is up over 300% year to date, and it looks like it's got a promising drug. But reality is there's others that are in the race. So
Someone will have one.
Yeah.
It's gonna be relatively soon, but again, even right now, there's some businesses that close due to the lockdowns that aren't reopening.
That's true. And I've kind of tried to make this point earlier in the show. We have seen economic information come out that is better than was projected recently.
Well, it's hard to beat. I mean, it's hard not to beat literally
Easy comps, right?
literally depression level
Right.
economic data.
But the other point is, and you say depression level data, the thing that we have seen has damaged the consumer. We don't know how deep that damage is going to be.
Right.
And we've got heavy unemployment, and we've got the consumer. In order to be a consumer, needs to have money. You get the money from the job. If the job is in question, the consumer is in question.
I
right?
think the other thing that's really fascinating to me about this is the entire recession that we're currently in is being blamed on this virus. So everyone thinks if we just solve the virus, we've solved the economic contraction.
Right.
History has shown that recessions typically last, the market effects last, what, a year or two?
Yeah,
18 to 24 months?
Exactly, yep.
To say, well, in February and March, we're like, everything's fine, to get to April and say the world is on fire, and then to get back into June and July and be like, well, everything's fine again, is a little, it's a little absurd to me.
You're saying there's still some lingering smoke from the world having been on fire.
I would think so.
Yeah,
I
tend to agree. I agree.
That's my theory. It may prove incorrect, but
yeah. Well, I mean, we've stayed invested. We just haven't gone crazy.
Yeah, exactly.